No stock is bulletproof, but one stock might just be fireproof. Investor Beat starts now. Thanks for watching. I'm Chris Hill. A quiet day on Wall Street, but do not expect that to last. 10 of the 30 stocks in the Dow Index reporting this week as earnings season kicks into high gear. Joining me in studio today, Jason Moser and Matt Koppenheffer. Let's talk about one of those Dow stocks. Last Friday, shares of Boeing dropped 5% after an empty 787 Dreamliner caught fire on the runway at London's Heathrow Airport. Shares back up today after the company announced that batteries were not the cause of the fire. I guess it was just a regular plane fire that they had. But how much more headline risk can this company take?
I think they have as much headline risk to the low side as they do to the upside, really. When you look at planes, they work in a basic duopoly with Airbus on the other side. And so with something like Boeing, this is a company that has about a $400 billion backlog of activity to work through, along with another potential $75 billion contract to sign with the U.S. Air Force, along with about $2.5 billion in net cash on the balance sheet. So because of the competitive advantages there, because of that moat that they have, it's one or the other. And that's why you see less volatility in a company like this on both sides.
Yeah, definitely a business. You and I aren't going to get together and throw up an airline, but we were talking earlier today, you were pointing out that this is not just a large business. For America's economy, it's a crucial one.
Yeah, when you think about businesses that are too big to fail, we hear all the time with the banks. When we think about Boeing, would the American people, would the American economy really want to see Boeing go away? And you're right, Chris, you and I are not going to get out there and start a new plane company. The three of us get together, though,
there's potential.
Maybe we have a shot.
I think the three of us may be like a Groupon style business. We could maybe handle that. What do you make of Boeing stock when you look at shares close to an all-time high? Does it look cheap to you? Does it look like there's room to run?
I look at a company like this, and while I admire this company for its competitive advantages and its competitive position in its industry, at around 20 times earnings, they only yield about 1.9%. If there was a better yield, if the yield was somewhere around 3% or so, it could be a nice income investor play. But I just don't see a lot of upside there, really. I just would look elsewhere.
All right, let's get to some of the day's movers and shakers. Citigroup's second quarter profits rose 42%. Revenue came in higher than expected, too. Shares doubling over the last year. What do you make of this, man?
Investors are coming back to bank stocks finally, and the valuations still really haven't caught back up to the reality of the fact that the banking business is chugging along again. Citigroup's quarter looks solid. There's some knocks that you could have to it, but the balance sheet is building back up. The bottom line is looking strong. Overall, I think this is a much better looking bank than if you just look back a year ago.
Leap Wireless more than doubling after AT&T offered to buy the company in a deal worth $15 a share. Why then is the stock trading somewhere in the neighborhood of 17? Why the uptick like that?
Well, I think the assumption is that Leap is now in play. There's the potential that regulators could interfere with this deal. And so while AT&T is playing for that spectrum there, it's not necessarily a done deal yet. And there is some consolidation going on in that industry. So I think there are probably some people out there thinking that this deal might not actually work out and that Leap might be an attractive target for someone else out there. But either way, if you've been holding Leap over the last 5 years, you've got to be looking at today and just loving it because it has woefully underperformed the market until now.
BlackBerry's Z10 smartphone got some good reviews when it first came out, but after weak sales, the company announced it is cutting prices in half. This seems like a desperate move. Is it a smart move, possibly?
What do you do at this point? You've got Apple kind of taking over the market. You've got the Android phones out there doing battle for it, and when it comes to BlackBerry, they tried pulling the lever of product. It looked like they had a pretty good product out there. Turns out that it wasn't able to do the job, so you pull the lever of price, and that's what they're doing. They're doing what they can. I don't know that it's going to work.
And finally, since its IPO back in April, shares of Fairway Group Holdings have risen more than 50%. The high-end grocer has just 12 locations in the greater New York City area. And I should mention, Jason, competing with the likes of Whole Foods. It seems a little bit like a David and Goliath situation, but so far for shareholders, it's working out.
Yeah, and I think you keyed in on something right there that's very important in high-end grocer. And they've at least defined themselves. They're not kind of stuck in that middle segment like a Kroger or something like that where they're not quite sure if they're a value or a high end. And so that's where Fairway stands. And at 12 stores today, they see a market opportunity of somewhere in the neighborhood of 3 to 350 stores nationwide down the road. And so that makes it a little bit more on par with something like a Trader Joe's or a Whole Foods Market today. Who knows if they'll be able to get there, but the price today is saying that, hey, there's an interesting growth story here. We think it's got some legs. Give it some time to work itself out as a publicly traded company. Let's keep an eye on it, see how they do.
All right, that's going to do it for Monday. Let's look ahead to the rest of the week. What's a stock you've got on your radar?
Got to go with Bank of America. We've seen 3 of the 4 U.S. big banks report so far. Bank of America will report later this week. What I've been looking at through bank earnings season so far is the impact of higher interest rates. We're going to see this on the income statement in terms of the mortgage fees that they collect. We also see it on the balance sheet in terms of the falling prices on the bond portfolios of these banks. So that's what I'll be looking at when Bank of America reports.
Okay, Jason, what about you?
Yep, big day for Yahoo tomorrow. Marissa Mayer gets out there to report the quarterly earnings. It's been a banner year for this company. I think they've really done a good job at sort of turning themselves around and creating a bit of a strategy there, making some acquisitions really geared towards mobile and personalization. We don't know yet whether these acquisitions are going to really pan out, but I suspect tomorrow we'll get a better idea of where they see things headed.
And as her first year wraps up, hell of a rookie year for Marissa Mayer.
nothing but applause all the way around.
All right, for Jason Moser and Matt Koppenheffer, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.
People on the show may have interest in the stocks they talk about, and the Motley Fool may have formal